warm welcome to this week's video update. My name's Scott, and this is edition number 20 now of the video updates. Last week, I also did the video update on Friday, if you did watch, which meant it's only been one working day since the current update now. But what I'm going to do is I'm going to skip the graphs for this week because there's only been one day change, and just get into what really happened last week, some additional information, and what to expect and what to look out for the week coming. If you did want to see those graphs or have a higher detail on the price changes week to week, I encourage you to check edition number 19, where I went over that on Friday. And as I say, the price changes have not really changed much from one working day. Let's jump straight into what happened last week, and these are some additional factors that I did not cover on the previous video. So firstly, new Dutch LNG import has begun. So there's a terminal in the Netherlands that has now begun to send out LNG into the grid in Central Europe and the Netherlands itself. So this is very good. This is bearish news. It helps provide a new supply source for Europe, and I fully expect the Dutch to kind of increase the amount of cargoes they're now going to be getting into this terminal, to kind of add that as a supply chain into the winter for Europe. So that started off as very bearish news. That kind of went operational the middle of last week, and it's kind of continued into this week as well, that bearish fundamental news. Next is traders deleveraged a lot of positions on Friday. So given it was a bank holiday weekend, the 3-day period where the markets will be shut, traders looked at selling some positions where it's considered sometimes a risk just to hold a position over a lengthy period of time going into the weekend, particularly as it's a 3-day one. So that added some selling pressure into the market. It'll be interesting to see if that continues into this week, that selling pressure, or if it was just a weekend kind of effect there. But it definitely caused markets to come down a lot on Friday. For context, we saw both gas and power markets drop around 10% in wholesale costs on Friday. It wasn't the only factor, but the fact traders were selling their positions helped definitely. And then one bullish kind of factor was oil. So oil's been very volatile over the last few days. And it went as low as $88 over the weekend, and it's now currently trading at around $92. So these are $4 swings we're seeing in the commodity price of Brent. There's been a couple of reasons attributing to the recent gain. So firstly, China has lifted lockdown measures in certain provinces, the Chengdu province, for example, and that sends a signal that China's demand would be expected to increase. The next is regarding OPEC. So OPEC actually missed their production target this month, and the bulls of oil have always kind of speculated that OPEC will struggle to hit targets even if they do ease back cut productions. So it seems to be the case that they will correct on that. So it will be interesting to see where we go forward if OPEC continue to miss their production targets, and that does indicate more worrying signs in terms of getting oil kind of scaled up and back up to full production there. So that added bullish momentum to the commodity, and I fully expect that to still be volatile this week with a lot of kind of moving factors in play there. Let's look at this week's outlook. So it's looking actually very good for once. These are 3 bearish factors all to consider. So firstly is the French nuclear power is expected to ramp up this winter, and this is probably the most significant. The market is still having to price in some uncertainty whether there'll be any delays, if they'll be able to meet expectations. But current expectations from France are to have 40 gigawatts of nuclear power by December, increasing to 50 gigawatts by January 2023. So that is a significant ramp up in production there. And as I say, if they do fulfill that, that will be very good. But the market is still a little bit hesitant on that and has some doubts. So overall, that is bearish news, though, considering where we were the last few months at very low output levels. Next is LNG. LNG has always been kind of a key factor in prices, ever growing so. And we're expecting strong LNG deliveries into the UK. 12 are expected over the next month. And further good news is actually from the likes of Belgium and Netherlands, which are expecting a further 11. That will offer a good level of support. It will offer a good steady supply chain into the kind of October, November period. And that is one of the reasons why we've seen, in particular, October and November contract periods discount the most over the last few days on the near curve. And then finally, it's looking likely that the EU could hit 90% storage levels by November. So at the time of recording, which is the 20th of September, the EU is on 86% storage levels. And with a month and a half to go, it looks very likely that it could fulfill and hit over 90% storage levels. Considering their original target was 80, and again, earlier in the summer, that 8% target looked in doubt. The fact they've surpassed that a while ago and set to kind of break that by a good 10% or so is very good news. So we'll be eagerly tracking that and seeing how kind of the progress goes over the next few weeks into hitting 9% target. That does then leave the EU with an extra additional 10% capacity or so that they weren't expecting heading into the winter, and puts them above the 5-year trend line as well. So all three of those very bearish, which makes a good change for once. So yeah, we'll be interested to see how all three of these pan out. That's it for today, a very quick update. If you do want some further information, we have a couple of options available for you. The Market Watch Live team, which is a live chat function on our website. There'll be someone there between 10 and 12 Monday to Friday. And then we do have our main website as well, where we post daily and monthly market content for you, as well as additional blogs and such. So please look out for that if you need anything else. If not, I will see you next Tuesday for a complete roundup in the markets as usual. So yeah, take care. Thank you for watching.